Sanjeev Budh, Advocate Pankaj Shah and Advocate Umesh Majmudar to come near the dais at the earliest. Thank you so much. To escort Sir onto the dais, along with the dignitaries, Advocate Pankaj Shah, Advocate Rajesh Shah, Advocate Bhupendra Thakkar and Advocate Umesh Majmudar. We welcome you all onto the dais. I request C.A. Sanjeev Budh sir to kindly welcome Advocate K. Vaitheeswaran. Thank you, sir. I now request Advocate Tejas Shah to welcome sir with a memento. Thank you so much, sir. Let me take this opportunity and attempt to introduce Advocate K. Vaitheeswaran, sir. Sir obtained a law degree from the Madras Law College and enrolled as an advocate in 1990. He also has obtained graduate CWA from the Institute of Cost and Works Accountants of India and has completed ACS from the Institute of Company Secretaries of India. He has over 30 years of experience in advisory capacity as well as through appearance before appellate authorities, tribunals and courts. Sir wrote the first comprehensive book, VAT in India, when VAT was introduced in 2005 and has also authored several other books. Sir's latest book, Taxation of Digital Economy, published by Oakbridge, covers international tax and indirect tax aspects of the digital world. He is a chairman of the Expert Committee on GST, Madras Chamber of Commerce and Industry, and also a member of the General Committee of Madras Chamber. Sir has the Vocational Excellence Award from Rotary to his credit and is actively involved in various social causes through music and also forays into humor writing. Sir, it's a privilege to have you amongst us today at the Conclave. Sir, each one of us here is all ears for your address. I request you to please come forward and grace the podium.
It's a pleasure to be here in Ahmedabad, and thanks to all Gujarat Federation of Tax Consultants and IT Bar Association. IT Bar is actually quite well known because I am the president of the Revenue Bar Association in Madras, so we are part of a WhatsApp group of IT Bar, so I keep getting the information about what's happening in the bar. And coming to today's session, it was wonderful to hear the learned Supreme Court judge talk about things which are quite close to my heart as to how we're going to deal with the new world of digital economy, and it was amazing that she touched upon that issue so well as to what are the borders and limitations that we see and what we don't see. And the earlier presentation of Senior Counsel was brilliant, where he clearly pointed out as to how worlds are changing and how concepts in the old world may not be relevant in the new world, and how we may have to redefine and re-understand some of these concepts. So I think we have this, you have structured the session brilliantly. Congratulations to both associations for structuring this wonderful program. So with that, I would start my session. I would try to attempt a marriage between two unhappy persons, the income tax and the GST. You always look at it, forever there is, if you take any minister, any board chairman, they're always worried about revenue targets. We are not able to achieve, we have to grow revenues by 25% and country is growing by 3%. I don't know how they can match that, set collection targets, then from the collection targets it keeps on flowing on, and then high-pitched demands. And then of course we have this wonderful faceless scheme where it is face by face they've eliminated the concept of assessments and natural justice, and you knock the doors of the High Court all the time. We are having briefs across the courts when we just have to knock the doors and say, I just want to go inside, I couldn't go inside, I tried to upload my reply wasn't accepted, my reply was one point but the order was some other point. This is what we are looking at courts today. It's quite unfortunate that we are knocking the doors for court, but there's no other choice. It'll probably a transition. I hope it's a transition. So my attempt would be to try to see where are the converging areas and where are the areas where you will have to probably understand both these laws a little bit in depth. Some of these have been talked about. No tax shall be levied or collected except by the authority of law. It's so nice to read Article 265 again and again, and then look at one very senior intelligence officer saying that unless you deposit 1 crore by today, I will arrest you during summon stage, during investigation stage, before a notice, before an order. So somewhere, there is a disconnect between where we actually stand in terms of the what is written in the stone and what is actually implemented. Taxation includes imposition of any tax or imposed whether general or local or special, and tax shall be considered accordingly. These are broad definitions just for the sake of completion. And it was already talked about, union list, state list, 7th schedule, entry 82. I won't repeat and harbor again. Indian Income Tax Act 1922. Then we saw the 1961 Act. This again was referred to by our Supreme Court judge in the morning. But somewhere, this concept of real income, I see very senior professionals here, some of with 60 years practice, 50 years practice, 40 years practice. So they would have all enjoyed this real income concept that we always believe that tax should be on the real income. But over a period of time, we have completely killed it. The legislation based on the assumptions have completely gone about the basis that you may have any kind of transaction value between you. I don't care. I'll go by presumptive value. I'll go by market value. I'll go by guideline value. I'll go by notional value. I'll go by 3 or 4 values out of whichever is higher. So things have completely changed, and this real income theory, just bringing back the past, the famous Sunil Siddhartha Bai's case and KP Varghese case, which was also alluded by the Senate Council in the previous session. Having talked a little bit of the constitutional aspects of direct tax, the entire list concept got shaken up by GST. Because the prelude to GST was the 101st Constitutional Amendment. What 101st Constitutional Amendment actually created was, one can call it as a masterpiece, or one can call it as something which is completely innovative. But what is interesting is that it is neither a union list, nor a state list, nor a concurrent list. So it is something like a joint levy. So on the very same transaction, the center says, I want GST. On the very same transaction, the state says, I want GST. Luckily, as on date, the laws are the same, as on date. At least the parameters, the rules of the game are all the same today. What is supply for CGST and what is supply for Gujarat GST will be the same. Luckily, they don't go through a change. So Article 246A empowers the Parliament and the legislature to make laws with respect to GST. And GST is defined as a tax on supply of goods or services. I think you need to connect the power. Battery is going low. So we had the CGST Act, the IGST Act, the State GST Act, and the Youth GST Act. Done? So let me straight away go into GST. For some reason, they decided that when we implement GST, let us put the existing laws into the mixie. Put excise law, put customs law, put service tax law, put VAT law. And then if there is something from income tax, let's put that also into it. And then why only this? Let's add some flavors. Let's borrow some Australian law, from European law, some Canadian law, and then some own thinking, put all of them into it, and then mix it in multiple forms and then give a definition, which is strictly speaking, we don't know whether it's a taxable event or it is all inclusive. So supply definition is all forms of supply of goods. I don't know what is supply, but I'm supposed to know what is supply already. So all forms of supply of goods of both such as sale, transfer, barter, exchange, lease, rental, lease, disposal, made or agreed to be for a consideration by a person in the course of furtherance of business. So legally, when you look at it and vivisect this definition, two things stand out. Consideration is a must. Second, the transaction must be in the course or furtherance of business. Now, I am projecting probably a contra view compared to most of the chartered accountants who would say that every transaction is liable to GST. Now, let's imagine a situation like this. You're a professional lawyer. You're not in GST at all. You're not required to register because somebody else pays the GST and a reverse charge mechanism. You sell your car. You sell your old car for 25 lakhs of rupees. It has crossed the 20 lakh threshold. Should you register for GST? Now, somebody will tell you that you should pay GST. But if you look at the definition of supply, is the sale of car by a practicing lawyer a sale in the course or furtherance of business? The answer is no. So the test has to be from that perspective. Is it in the course or furtherance of business? So it is not a general idea that every transaction is taxable, but must be something in the course or furtherance of business. And then you have section 7(1)(c), which says that certain activities specified in schedule 1 are agreed to be made without consideration as a supply. So here they talk about transactions between related parties and transactions between distinct persons. I'll just give one example. Let us say Gujarat. You have a head office here. The manufacturer sitting in Gujarat stock transfers goods from Gujarat head office to Chennai branch office. Now this is a pure stock transfer. In the pre-GST law, it was not taxable under the CST Act. In the GST law, it is treated as a supply. So from an income tax perspective, you will say, where is the supply here? Where is the consideration here? After all, it's the head office branch office transaction, right hand, left hand transaction. But from a GST perspective, it would be perceived as a supply and taxes payable because of the definition. So I'll bring straight away the issues at play. You're going to have disputes in the next 10, 15 years or even more on supply versus income. You will definitely face it. Why? What constitutes supply need not constitute income. So as I explained to you, supply can be very wide. Stock transfer of goods between Chennai and Ahmedabad could be a supply. Inter-unit billing within the company. Companies who have sophisticated accounting systems whereby they would like to allocate costs. They say that CFO is working for the entire 7 jurisdictions, 7 states, and therefore the CFO's cost is allocated, or the admin cost is allocated, or the head office spends a huge money on IT infrastructure, and therefore they allocate the IT costs, management costs are allocated. Cost allocation is a costing principle to identify profits of each center or unit center. But inter-unit billing within the company can trigger a GST liability, but there's no income tax liability. But if you look at the returns, there'll be a conflict. Advances for services would be liable to GST. You receive money, it is advance. Service yet to be provided, GST is payable. Income Tax Act, you will say income is yet to accrue. You will say that income is yet to accrue because those triggering factors or the events that are required to make that income taxable has not yet arisen. And therefore, you will book it as advance, treat it as advance. In related party transactions, you have different mechanisms under different laws. In GST law, there is a concept called as open market value. And open market value is something which is very difficult to determine. And otherwise, they have cost plus mechanisms. In income tax, you don't have that unless related parties are involved and that to international transactions or specific disallowances. So what happens during IT assessments? When income tax assessments are taken up, they will compare the financial statements and the GST return and then expect them to match. They will not match. They cannot match. As I said, unhappy persons trying to get married. So their thought process are completely different. The laws are completely different. What is taxable in both laws are completely different. But the income tax officer expects that both of them should match. GST officer also expects both of them should match. So here you straight away have a situation where one notice is issued. As per your IT return, you have offered only 20 lakhs, you have offered so-and-so X of rupees. As per GST return, you have shown so-and-so rupees. Reconcile. One line reconcile. And of course, 24 hours, 48 hours, whatever is given, the time frame which Tushar talked about. You have to rush and with speed and get those numbers. Sometimes the department thinks that the assessee's consultant, the assessee's chartered accountant, the assessee's lawyers don't sleep. Okay, 24 hours they can work. Any task you give, they can do. Most of the time, most of the professionals sit at 12 o'clock in the night and upload data because that is the time when the speed works and the portal works. See, today, biggest achievement, most of IT, I'm sure most of you who practice in the original side, I don't, but my friends have told me that they do a hi-fi if a return is accepted within the organization. So that is a level, simple because the portal has got its challenges. So we are living with one more new kind of thing. In fact, I jokingly say in many of the GST meetings saying that GST law may say anything, but after the last section, there is a section which is written in invisible ink. Nobody knows what that is, but if you carefully read, notwithstanding anything contained above, GST portal shall prevail. Okay, you might have anything in the section, but GST portal will decide that no, you can't do this. We can't accept your return unless you pay the tax in full. So like that IT portal said, okay, why should GST portal alone should do all these things? We'll also join the game. So they also joined the game. So in IT assessments, GST returns and IT returns need not match, but for some reason they expect that to match. Audit observations in GST are 9C may not be conclusive. For many years, 44AB tax audit report was not the basis for IT assessment. You do a tax audit report, you do a fantastic 44AB report, he'll keep it aside and say, I'm going to make all these additions. Arey yaar, one professional has spent so much of time, done a 44 AB complete analysis, that is okay. We'll do the assessment separately like this. Now in GST, surprisingly, they take this GSTR 9C very seriously and then take the GSTR 9 also very seriously and compare these two and say, give me reconciliation. This brilliant question that comes is, reconcile your GSTR 3B and GSTR 9. Sir, GSTR 3B is my monthly return, so-called monthly return, where I report my transactions. What is the GSTR 9? What is GSTR 1? GSTR 1 is a consolidation of many information which the government wants to know. The government wants to know, are you paying something to a lawyer are you paying something to a GTA where GTA has to pay reverse charge? Please give the data. Are you doing a transaction of sale between Singapore and Thailand? Please give the data. So I give so much of data. So GSTR 1 figures is 26 crores. GSTR 3B figure is 12 crores. Officer says, there is GSTR 1 you have shown 26, GSTR 3B you have shown 12, 14 crores pay tax, interest and penalty. You are comparing apples and oranges. They are not comparable at all. But unfortunately, nobody is there to give this kind of, the notices simply come, and that too notices are served in vague formats and portals and emails, and now everything has been blessed by statute saying electronic data communication is enough. You have to keep on watching your portal every day and to see if something is flashing or not. What is supply is not necessarily income is my fundamental point here. Now I'll look at the reverse. What is income need not be supply. Sale of land and building. We have scenarios where I sell the land, I sell the building, you have capital gains tax, I report the transaction in IT, I show the entire transaction in my IT return. But for GST, sale of land is neither supply of goods nor supply of services. Therefore, it is not at all taxable. If it is not at all taxable, my IT return will be higher than my GST return. And that fellow will get upset. Arey yaar, you are showing more money in income tax, you are not showing much money in GST. Where is the difference coming from? Employee remuneration. Employee to employer is not liable in GST, very much liable in income tax. Salary is very much taxable. High sea sales. I sit in Ahmedabad, place an order on a foreign party, ship is coming. Before I clear the goods, I transfer the title to somebody else. I do a trading. So I've purchased, I've sold. I'll report the profit in income tax purposes. But for GST, it is non-taxable transaction. So GST it will be 0, here it will be 10 crores. So again, reconciliation issues. Warehouse goods, I transfer title. Compensation. In many cases, I may receive compensation. And Income Tax Act, for years we have argued saying that compensation is not income. And they have tried to amend the law at every period of time. Many of the seniors would remember, even in the context of capital gains, when that ship got completely sunk into the high seas, it was argued that the capital asset did not exist and therefore no capital gains can be taxed. All those judgments were there, and then they had to amend the definition of transfer and say relinquishment of rights, extinguishment of rights, all these are transferred. So one by one, each judgment was nullified. You keep arguing saying that cost of assets cannot be identified, therefore capital gains cannot be computed. Cost of assets shall be nil. So section 55 kept on growing. So you find that law has changed in income tax in significant number of transactions, but compensation, which was not taxable in many segments, slowly became taxable in income tax under various sections. But in GST, one can always argue that compensation does not involve consideration. Compensation is not the same as consideration. So there is no supply for consideration for GST to apply. So as I said, income versus supply can be an issue. Services where GST is payable by another person under reverse charge mechanism. I will have revenues, but that GST is payable by somebody else. In fact, in many cases, lawyers have got these notices from the service tax department. They've got this phishing notices saying that how come you have not paid service? How come you have not registered at all? How come you have not filed returns at all? How come you have not paid service tax at all? I'm not required to. It's not a question of claiming exemption. I'm not required to register at all because the client is supposed to pay the service tax under reverse charge mechanism. So that became a big issue and courts had to step in and try to give some directions. Then you have number of services exempt through notification GST, but they're all liable to income tax. Examples, healthcare, slum sale. Slum sale has got its own mechanisms. Specific works contract services, renting of a residential dwelling for use as a residence, GTA, interest or discount arising out of extending of deposits, loan or advances. These are all exempt in GST, but taxable in income tax. So obviously we will have reconciliation issues. Now, having talked about the general supply versus income and income versus supply, I will take specific items. The biggest challenge which the country is facing through is fake invoices. Now, everybody is worried about it. The media is worried about it. The finance minister is worried about it. Everybody talks about it. And everybody talks in crores. 5,000 crores of fake invoices found out. 16,000 crores of tax transactions unearthed. Sometimes I wonder, you are collecting 1,30,000 crores as GST per month. Okay, 1,30,000 crores is GST collection. Now, for a year, it is significantly more than 15 lakh crores. Should you be really paranoid about 20,000 crores of fake invoices on a 15 lakh crore turnover of collective GST and change the entire law only because of this? Because what has happened, most of you who are in practice in GST would know that the law has become difficult and difficult and difficult only because of this fake invoice. They believe that the fake invoice is completely choking the system, forgetting the fact that fake invoices existed in the sales tax regime itself. It was called bill trading, old name. Old name bill trading, new name fake invoices. Is it so peculiar that only Indians do fake invoices? World over, fake invoices exist. They call it circular trading. They call it carousel trading. You have this, this exhibition where you have this carousel where you can sit on a horse, there will be a donkey, there will be a tiger, you will keep on going in circles when the music is playing. If you are an adult, you fall down giddy. If you are a child, you will be happy. So that's how typically it works. So that is called as circular trading. Europe, you will have country after country doing this kind of transaction. So why should government be so obsessed with this? My question which I've been asking everywhere. And in fact, what has happened is when you focus so much on something negative and try to change the law around it, you may hurt a lot of bona fide businesses. I still remember what Palkiwala wrote long back. He said, if you're running a dukan, if you're running a shop, there will be some element of shoplifting. There will be a small percentage of shoplifting. But if you focus your entire energy on trying to stop the shoplifting, you won't stop the shoplifting, business also will stop. So we should somewhere understand that we can take action, but not in such a manner that hurts good people, good businesses. So I'll explain the link between fake invoice and income tax and GST in the next set of slides. So what is fake invoice, or what is the understanding of the government as far as GST is concerned? Invoice without any supply. One fellow says, I want ITC. This ITC seems to be good. I want ITC to be used to pay GST. How do I get ITC? Another fellow says, I'm there. Main hu na? I'll give you. So I'll give you invoice. What about goods? Don't worry, I'll just give you invoice. You settle through bank, then we'll work out some way we can settle through the payment mechanisms. You will have ITC. So A without goods raises invoice on B. B takes ITC. B without goods raises invoice on C. C takes ITC. C without goods raises invoice on D. And D is the actual fellow who utilizes that ITC or planning to utilize the ITC. Even before this entire exercise is completed, department comes and takes action against A, B, C, D. Now please remember, first transaction of A, no goods, only invoice. So government said it's a fake invoice. Fine. Why is it a fake invoice? No supply, but you have charged GST. Fine. The other fellow should reverse it. Fine. Then should A not get refund of the GST? Because what is GST? GST is a tax on supply. You have loudly from the terrace declared that this is not a supply and this is a fake transaction, and unnecessarily GST has been charged to enable ITC. You have gone there and reversed that credit. That means you have collected that money. Should you not give a refund to the A? Because that is not a tax. Article 265. Tax can be retained also with the authority of law. You cannot simply retain something because somebody has paid it. Now what is happening in reality is that collection happens from A, collections happen from B, collection from C, and collection from D. All the four people pay on a transaction which is not even a supply. Government has collected 4 times. This aspect of it is not being addressed at all, because all collections are before proceedings. At summons stage, inquiry stage, discovery stage, some pressure, people reverse. So it is not, I'm not trying to, back for these kind of unscrupulous transactions. I'm saying that there is one element of an unscrupulous transaction, but the proportionality or the action seems to be across the chain. So where ITC is used to pay GST or ITC is obtained as a refund, then there is a real revenue loss. The guy who uses the ITC and claims a refund, government loses money. The guy who uses ITC to pay the tax, government loses the money. Otherwise, you cannot simply say, I'll take action against everybody. So what is the department doing? Statements are obtained from many players in the chain. Some fellow says, yes, I have generated fake invoices. Who are your customers? He'll give a list of all customers. Now, out of the 100 customers to whom he has supplied goods, for 30 people he has actually supplied goods also. He is a fellow who sells goods, also sells invoices. Therefore, for 70 people he has given just invoices, for 30 people he has given goods also, but all the 100 names he writes. Then department goes to the 100 buyers and says, he has given your name, reverse the credit. No, I bought goods, I have the goods. We don't care, you will be arrested, otherwise reverse. Then he goes to the consultant, he goes to Charcourt saying that, why do you want to get arrested? Reverse, no, what is your problem? So he reverses. So what is he effectively doing? He is reversing ITC with interest because there is some pressure from the department. So statements are made to the effect that there are no sales. Even though ITC is reversed, parties will ultimately say, I will dispute it whenever the show cause notice is given. Because the statement is wrong, I have actually purchased the transaction. And most cases, 99%, cross-examination is never done. For example, if government comes and tells B that A has said that this is a fake invoice transaction, please call A. I would like to cross-examine him. No opportunity given. No cross-examination done. Without cross-examination, how do you conclude that statement of A is genuine and based on that B's credit can be reversed? So what follows? There will be adverse findings based on statements taken from others. Assessee is legally entitled to cross-examination. Supreme Court in the case of Parvati Metals has said that whether statement given by the foreman can be used against the appellant without affording the opportunity of cross-examining while holding disallowance of Sinvat credit, Rajasthan High Court held that we are of the considered opinion that cross-examination is the right of the assessee. CBI versus VC Shukla is a well-known precedent. Third-party records cannot be relied upon as an admissible piece of evidence. Therefore, assessee can counter the statements. Just because reversal is done at investigation stage need not mean that the matter has been accepted or conceded. Assessee can always contest the matter when the show cause notice comes. Now, why I am saying all these things? Because GST investigation would involve collection of data, statements after summons, etc., and you are entitled to object to the show cause notice. Show cause notice will result in a hearing, an order would be passed, you can go on appeal, you can go on appeal to first appeal, second tribunal, second appeal is God knows when tribunal can be created, but you have a right to contest these matters at all these stages. The Income Tax Department and I says IT and GST are trying to get married under unfortunate circumstances, but the parents are all friends. So whatever is communicated to GST department is properly shared with the Income Tax Department. So they are all in beautiful communication. So what happens is that this data, this investigation, this fake invoice racket is passed on to IT. So then IT is asked the question, you have shown so much as purchase of goods, you yourself given a statement and reversed the credit. You yourself reversed the entire GST on this transaction saying it's a bogus purchase. Therefore, it is also a bogus purchase for income tax purposes. Now, that is where the issue comes up. Is it really a bogus purchase for income tax purchase? He has to demonstrate. Not based on GST investigation, because that GST investigation, I gave a statement under duress, pressure, cross-examination was not there, and proceedings have not concluded. Show cause has to come. I can fight it. So merely because you have agreed to reverse the credit under investigation need not categorize or metamorphose the transaction into a bogus transaction. You still have a right to argue that this could be a genuine transaction. Plus, because of this inquiry, your cash transaction will also come into scrutiny. Why have you received 1 crore as sale receipts and why have you withdrawn 1 crore the next day? Sir, I think power is gone. So purchase expenditure could be questioned by the GST investigation, and there could be proposals to disallow the expenditure. Cash deposits could be asking for explanation. So I already talked about the other aspect. If you say that everything is fake, can the income be taxed? You're selling that the transaction is a fake transaction. You're saying that you reported wrongly sales. If purchase is wrong, sales is also wrong. Why should only one side be tested? You want to disallow here, please reduce this also. Why should there be an income on the transaction? So unfortunately, a very, very peculiar views are being taken, and therefore you need to contest the matter very legally, because if there are scenarios, you have rights in terms of all those things. Now, as if this wasn't enough, because of the obsession that we should arrest everything in GST and convert everything, they brought in section 271 AD, Finance Act 2020 with effect from 1/4/2020. Like how this, demonetization brought about that 80% plus tax. This section was brought about by the fake invoice investigation. So what does this section say? Without prejudice to any other provision of this act, if during any proceeding under this act it is found that in the books of the account maintained by any person there is a false entry or an omission of any entry which is relevant for computation of total income to evade tax liability, officer can direct such person shall pay by way of penalty a sum equivalent to the aggregate amount of such false entry. The penalty is the value of the transaction. So, if supposedly 22 crores is booked as purchases and it is a false entry, 22 crores is the penalty. Seriously, this business is not really worth it. The consequences are much more dangerous. So, 271 AAD says, without prejudice to the provisions of subsection 1, the assessing officer may direct that any other person, they are not happy just with the fellow, any other person who causes the person referred to in subsection 1 in any manner to make a false entry or omit or cause to an entry, he shall also pay the penalty. So 271 AAD subsection 2 is even more trickier than subsection 1. So what is the effect of this? Income tax enters into bookkeeping. The effect of that is income tax has made inroads into bookkeeping. But my question is, there are enough provisions in Income Tax Act to govern this. 271C will take care, prosecution provisions will take care. Why unnecessarily add one more section just because GST had this problem? Why should there be any additional income tax? Who is this other person? Can it be the employee, the director, the independent director, or the consultant? Who is this other person talked about in this section? But some windows or safeguards. False entry as per explanation includes use or intent to use. Therefore, intent has to be definitely established. You must also establish objective to evade tax liability, and this also has to be established. And the legislative intent was clearly in the context of the fake invoice transaction. Assessing invoicer may direct indicates some element of discretion, and section 274 would require show cause notice before any kind of action can be taken. So, first part of my presentation, I covered the generality. Second, I addressed the fake invoice. Third, I will take up specific issues with reference to income tax and GST in the context of one by one charitable institutions. We are all aware of section 11. Of course, Finance Bill 2022 has made drastic amendments to the entire scheme of charitable trust. Therefore, if you are a charitable trust duly registered or whatever you are happy with it, don't be happy. One principal commissioner or commissioner can suddenly have intelligence that no, something is wrong with this trust, or an assessing officer will get some intelligence that something will happen, sir, or there's an intelligence system which they're going to create which will say something is wrong with this trust, and immediately a notice will be given. And if the notice comes, then the commissioner or PR will sit on it, and then he has to pass an order saying that either way, accepting or not accepting, either it is bona fide or not bona fide, then only the entire system can work. So the entire trust is now subject matter of distrust in a way it operates. In fact, instead of doing this, they can tax political parties. No, political parties are exempt from income tax. Why not bring political parties into tax instead of keeping on going into charitable trust? Again, same problem. 10 people are violating the system. 990 people are doing good, great charitable work. So much of voluntary contribution is being spent for fantastic purposes which government should otherwise do. So, just because this 10 are doing some nonsense, this entire 1000 is suspected, and therefore you have this kind of distrust provisions. So, we have the section 11, relief for poor, education, yoga, medical relief, etc. And the last one, any other object of general public utility, has been the tested one at all points of time. So, general assumption is that if I am a public charitable trust, there is no GST. This is a wrong assumption. Income tax is quite wide. As I said, education, relief for poor, yoga, medical relief will all qualify. But in GST, no. Because your education doesn't mean you will get protection. Because your health, you won't get protection. You must fit into the charitable activities as defined in the notification. And that is a very limited scope. Public health by way of care or counseling of terminally ill persons or persons with severe physical or mental disability, persons affected with HIV or AIDS, person affected to a dependence forming substance. So, healthcare very, very, very limited. Education not even there. Religion, spirituality, yoga is there. So, you get the exemption, here also you get the exemptions. And educational only for certain categories, abandoned, orphaned, homeless children, physically, mentally abused, traumatized persons, prisoners, etc. I don't understand. Why do you want a GST from a public charitable trust? Of course, government giving a response saying that, look, don't just criticize us for putting GST on public charitable trust. We also put GST on residential welfare associations. That's another irony. 12 flats form an association. 12 flats form an association means 6 of them can't see eye to eye. Ground floor fellow refuses to pay maintenance, saying that lift I am not using, why should I pay maintenance? So regular fight to collect the basic charges only to pay the maintenance fellow, lift fellow and all other things. Mutuality should apply. But GST says, no, we don't care. Anything more than 7,500, you pay GST. So, and if out of the 12, 2 of them are chartered accountants and 2 of them are lawyers, there ends the matter. Okay, you can't have any decision making in that association. So imagine an association with 1,000 people. You want to imagine a community. So why should the government collect GST from welfare associations? So their logic is, if you can collect from trust, we can collect from welfare associations. So that seems to be their thought process as far as GST is concerned. So while all charitable institutions registered under 12AA subject to IT provisions would enjoy exemption, exemption from GST would depend upon the definition of charitable activities. I have a different view here. Of course, it would be tested. The view is that once I am a charitable trust duly registered under the Income Tax Act, and whatever activities I do, let us say I have a mandap which I am letting it out. Why am I letting out the mandap? To get the rent. Why am I getting the rent? To put it for, deploy for charitable activities, and therefore my activity is not in the course or furtherance of business. So one argument probably to get out of this, to go back to the supply definition and say, a charitable trust is not engaged in the course of furtherance of business. It is only pursuing its objects as per its charter, and for the purpose of this objects, it has to let out this mandap, and the revenue is deployed for whatever activities they have, and therefore it is not a supply. So that is a possible view which will be tested, because you can rely upon the old sales tax cases. You have the Sai Publication Trust, where the CDs and books were sold, and the sales tax department wanted to collect the sales tax on the CDs and books from the trust. The trust said, why am I selling this CD and tapes? It's not because I want to be in the entertainment business. I want to sell this because I'll get that money, I'll put it for charitable activities, I'll spend it for charitable activities. One more avenue for revenue generation. Voluntary donations without any specific direction would not constitute consideration. It will go to corpus. It is not even consideration. Therefore, it is not, there's no question of GST. Sir, again gone. Is power not coming? Want to change the laptop? So while activities for achieving objects of trust have been recognized in income tax for a period of time, matters will be tested once again in GST. Madras High Court in the case of Rao Bahadur has held that where an education institution lets out property as an activity for fulfilling the object of trust, the income is not even business income and qualifies for exemption. So some of those arguments in the income tax which we used to take can be tried out in GST. Now moving from charitable trust to healthcare services. Healthcare, you are all well aware of section 1023C. I don't have to labor on what is the scope of 1023C. Of course, we have this Finance Bill 2022, which has tried to align the old trust mechanism, new trust mechanism, and 1023C to get all together through various provisions. GST. Entire healthcare is exempted. That means hospitals exempted, diagnostic centers exempted, paramedics exempted, doctors exempted, nurses exempted. The pharma companies or the medical shops which sell those medicines are taxed. That's only an element tax, but the rest of them is exempt. Now, whenever all of us are professionals, we know that when something is exempted, it has to be defined. I still remember way back, there was this famous Supreme Court judgment in the case of Colfax Laboratories. In excise law, you have cosmetics which attracted higher rate of duty, pharmaceutical preparations, lower rate of duty, or medicine, lower rate of duty. So every fellow will say mine is a medicine. Department will say, every department official will say it's a pharmaceutical product, it's a cosmetic and therefore higher rate of duty. So one fellow was making this aftershave lotion called as Old Spice. So he was making this aftershave lotion called as Old Spice and then said that, sir, this is a medicinal preparation. Department said, clearly this is cosmetic. Then the assessee argued before Supreme Court saying that, look, when people shave, sometimes they get cuts. Therefore, that can cause infections. To prevent that infections only, we put this aftershave lotion. Therefore, aftershave lotion should be treated as a medicinal preparation. Matter landed before Supreme Court. Now, in Supreme Court, if you argue these matters, Supreme Court will lay down what the law is. So, Supreme Court went on to say, if something has to be treated as a medicine, it must be for curing a disease. Disease could be because of birth, disease could be because of infection in the lifetime of the person, etc. Shaving is not a disease, therefore this is not a medicine. So like that, you need to have definition. So healthcare which is exempted had to be defined, and the way they define it is quite wide: diagnosis, treatment, illness, injury, deformity, etc. But very clear. Somebody has an accident, and because of the accident there is an injury somewhere in the face, and when you go to the doctor, doctor says that, look, there's a face injury, it can leave a scar. If you want to talk to a plastic surgeon, I'll tie up with a plastic surgeon. Plastic surgeon comes and does something. Healthcare services. God has given you one nose which you don't like. And then you go to the doctor and say, I don't like this nose, I want a shorter nose or a bigger nose, etc. That is taxable. So this is the fine distinction. If you go for a plastic surgery, if it is birth related or congenital defects or accident related, no tax. Voluntarily you want to change something which something as nature has given to you, then please pay tax. So that's how they look at it as far as healthcare service is concerned. And of course, clinical establishment is well defined. In fact, one of the department officials argued that naturopathy cannot qualify for exemption. So the court asked the question, why are you saying naturopathy cannot qualify exemption? No, healthcare means he must have a problem first. Then the solution comes that is exempted. Then High Court said, this is stupid. If somebody is trying to prevent a problem by going before itself for something, that is also healthcare, given the exemption. So AP High Court, Justice Ramswaran, Telangana High Court, in the case of Mantena Satyanarayana, it's a brilliant judgment where they examined system of medicine. So what is the impact between income tax and GST? Income Tax Act is very explicit that activity must be for philanthropic purposes, not for purpose of profit. However, there is no indication in GST. Therefore, even corporate hospitals will enjoy the healthcare exemption. Definition of charitable activities covers certain activities linked to public health, but as far as GST is concerned, only if it is in the category of healthcare as defined, you will get the exemption. But I would say that GST is wider than income tax, but queries will come from GST while comparing GST returns and IT returns, because you will show lesser figure in GST, higher figure in income tax. If some of you are chartered accountants or BCom students would remember those, or +2 accounts, we used to do this BRS, no? Bank reconciliation statements, and half the time our hand will be going up and down to see with bank balance or check in hand, check in balance, etc. Same thing now, GST return going up, IT return going up. So this kind of reconciliation is inevitable because department decided to compare both. Education, 1023C, clause 3AB, income from a university or institution solely for educational purposes, which is substantially financed by the government. Clause 3AD, income of university, etc., certain purposes. But there is no definition of education institution in Income Tax Act. But GST is structured. If you are an educational institution, whatever you provide to students, faculty, staff is exempted. But you have to fit into the definition of educational institution. Examination conduction also is exempted. Select services provided to education institutions is exempted. Online journals and periodicals is also exempted. So Income Tax Act, as I said, is very explicit. They talk about a turnover limit of 1 crore, no such conditions in GST, but education institutions defined. Therefore, the preschool is covered, 11th and 12th +2 is covered, college, universities is covered, private coaching is not covered, diploma is not covered, special programs are not covered, they will all get into tax. So queries will come from GST while comparing GST returns and IT returns. Shares and securities. Income from sale of share and securities could be either business income or capital gains. Of course, we are not even getting into virtual digital assets. This new section 247 capital A by the Finance Bill 2022. So they look again, like how I told you, the mixture of customs, excise, service tax, etc. When Finance Bill 2022 designed to define virtual digital asset, they borrowed the technical definition and added special words. For example, there is no or otherwise in the technical definition of virtual asset. They added that word. Normally, virtual asset should have been enough. Or digital asset must have been enough. Virtual digital asset is what 247A says. And straight 30%, no cost deductions except the purchase cost, etc. How to calculate? We'll wait, we'll find out. Because today I've stopped speculating on provisions which are yet to become act. Because nowadays, last 3 years trend is, what is there in Finance Bill need not be there in Finance Act. What is not there in Finance Bill may be there in Finance Act. Okay. So by the time the Finance Act comes into force, we don't know what all changes will come in that particular provision based on what all articles are written in the digital space, what are discussions taking place, all amendments will take place. But the clear intention is to tax virtual digital assets. So whether virtual digital assets is goods for GST, future debate. It is clearly not legal tender. If it is legal tender, it is excluded because RBI does not recognize VDA. Only money is recognized. Therefore, fiat currency is only recognized. So, it will not be goods. So, it will not be tender. If it is not tender, it could be any other property. If it is any other property, then possibly GST can come. If GST can come, who should pay? Where is the location of the supplier? Where is the location of the recipient? All mind-boggling issues are inevitable as far as GST taxation is concerned, unlike the case of shares and securities. Shares and securities, you have clear provisions in Income Tax Act, and service, as far as GST law is concerned, they don't want GST on shares and securities. They have clearly excluded them from the ambit. But, I repeat, but, even though you don't pay any GST on the sale of securities, just like Section 14A of Income Tax Act, even though you don't pay any GST on sale of securities, 1% of the sale value of security shall be taken as exempt supply for reducing your input tax credit in GST. So, it's a revenue stream. Sale of securities will give you capital gains. You don't pay any GST on the transaction, but that revenue stream will disturb your input tax credit. It will be treated as exempt supply as per specific provisions in the CGST rules. Transfer pricing and GST. GST is on transaction value, price paid or payable. So, I export to UK, $100. Then TP officer comes, TP audit happens, all those queries are raised, and then they say, this is overpricing. You have unnecessarily invoiced $100 on your subsidiary. You should have invoiced only $75. So, how does it make a difference in GST? Anyway, it is zero rated. Whether it is 100 or 75, it is still export. But those questions are inevitable. Similar in import, questions can come. There can be questions on GST valuation based on transfer pricing. Next, I move on to search. In consequence of information in his possession, the authorized officer has reason to believe. See, earlier, if you remember that famous doctor's case, one fellow was there. He was very unhappy by the fact that this doctor is getting lot of patients. Huge crowd is coming. He is not able to get appointment at all. There is a token system and lot of patients are going to this doctor. So, he wrote an anonymous letter to Income Tax Department. This fellow is evading income tax. So, search was conducted. And then the assessees went to court and said that, what is the information in your possession based on which you conducted the search? I want to see it. High Court said, yes, please produce the data. How can you give the data saying there is an unhappy neighbor who has given a letter saying that this fellow must be evading tax? So, then the government got very panicky after this judgment, and then they started amending the law saying they won't disclose, they need not disclose, even court cannot ask, all those series of information can happen. But explanation now says, reason to believe as recorded by the income tax authority under this subsection shall not be disclosed to any person, any authority or the tribunal. Whether High Court is covered, in my view, no. It is still possible for the High Court to ask questions. Mere information on CBI that cash found in possession of the person was undisclosed without any supporting material cannot be considered sufficient for action under section 132. So, the point I am trying to make is, investigation in GST can trigger a search under income tax. An investigation in GST can be information for the department for a search under 132. Then comes another question. There is no GST investigation. But there is this fellow has got into trouble in income tax. There is an income tax investigation. Lot of people have landed in the premises. From morning, from night, from evening till next day evening, query is going on. And then the assessee says, yes, there is some element of this undisclosed income. I want to buy peace. I will offer this undisclosed income. Can you kindly go? So, voluntary declaration of undisclosed income at the time of recording of statement. Income tax. Voluntary disclosure of undisclosed income through a disclosure petition before conclusion of search, income tax. Income offered or surrendered during IT proceedings or voluntary additions accepted. So, these are all possible in income tax. Now, after doing all these things, this fellow passes on the information to GST. So, GST fellow says, you have offered 22 crores as income. You are in construction business. That means you have not paid GST on this transaction. Why don't you please pay GST to us also? You have paid him, pays me also. So, pay GST on this transaction. There are interesting judgments. Can there be an automatic inference that amount surrendered for income tax is automatically liable to GST? Answer is no. Same attempts was made in service tax. Punjab Hariana High Court in the case of Mayfair held that when 35 lakhs is surrendered before IT department, it cannot be attributable to consideration received just because he is under the mandap keeper business. You cannot assume that the money came under mandap keeper category. You do your investigation, you demonstrate that there is a supply for consideration, you demonstrate that he has provided services, and that is taxable. Mere offering an income tax need not tantamount to automatic liability as far as GST is concerned. Tribunal in the case of Bindra Tent Service has held that demand of service tax cannot be made based on presumptions. Service tax is demanded based on the income offered for surrendered to income tax department. So it's well reasonable amount of jurisprudence to say that what is offered for income tax need not automatically become taxable as far as indirect tax is concerned. Now this latest avatar. We saw your 26 AS. Oh, very good. I didn't see. You had access. Please show me also. As per this 26 AS, so much of TDS has been deducted. You have not paid GST on these transactions. Now that is absurd. A person deducts TDS based on his understanding of the provisions. And as if TDS provisions are very simple. Okay. TDS provisions are very, otherwise you won't have so much of jurisprudence on TDS. Whether it is a transport contract or not, whether it is a labor contract or not, whether 194C is applicable or not, or 194J is applicable or not, enough jurisprudence on interpretation. So a person who's cutting the check may have taken a safe route. Old principle, when in doubt, deduct. So he had doubt, 3 days might come, I will deduct. So he deducts tax at source. Just because he has deducted under a particular category, that doesn't mean that income takes that character. For example, take my case. I am a lawyer. I have billed a client for appearing before High Court. Legal services. That person's understanding of TDS was very different, and therefore he deducts 2% under 194C instead of 194J. Now can somebody come and tell me you are a works contractor? That is precisely my point. So TDS cannot be the basis for a GST assessment. TDS is TDS. Why is TDS come? That is because income tax believes that this fellow is making checks to various persons. That person receiving the check is not paying income tax. I don't know where to find him. Therefore, through TDS, I will find out. That is their answer. Then you had this next set of amendments saying that a lot of people have PAN numbers, etc., but they are not filing returns. I am not able to find out why they are not filing returns. Therefore, you find out whether he has filed returns for 2 years. If he has filed returns for 2 years, then apply the normal rates. If he has not filed returns for 2 years, apply the higher rate. Arey, if you don't know, how will I know? We will give you utility. You go to the portal, feed his PAN number, feed his data, it will show you whether he is a specified person or not. If he is not a specified person, that means he is complied with the law, deduct TDS at normal rates. If he is a specified person, that means he is not complied with the filing of return for last 2 years. I am baffled. If the utility knows that the person has not filed return for 2 years, why can't the department take action against those fellows instead of making me deduct tax at double the rates? So you have the information in your possession, and now Finance Bill 2002 has made it 1 year instead of 2 years. So it's TDS is becoming tedious, if I put it that way. So number of queries are being raised in service tax and GST based on Form 26 AS without appreciating the fact that income may not be exempt, but service could be exempt and not taxable. Excess TDS is always possible. Reimbursements are not liable to GST, but that fellow decides to deduct TDS on reimbursements. Deduction under 195, place of supply could be outside India, but 195 could apply and they could deduct tax. So therefore, even though Form 26 AS may reflect the TDS, GST would be payable by reverse charge person under another person. So there could be many number of reasons why 26 AS and GST returns are not comparable, but unfortunately you are forced to look at this kind of a data. Now you have claimed ITC on various goods and services. Why are you claiming? Sir, it is used for the purpose of business, or it is intended to be used for the purpose of business. Income tax officer says, no, this expenditure seems to be personal. I don't agree. I will disallow. Travel expense, telephone expense, vehicle expense, guest house expenses, all those things he disallows. Now why does he disallow? He says that this is not for the purpose of business. Bulb from the other fellow. It is not for the purpose of business, my cousin has held. Therefore, you can't get ITC. Because ITC means goods used in the course or furtherance of business. used or intend to be used in the course of another business. So one trigger can automatically echo there. It's just a matter of time. I'm just visualizing what can happen. I'm not saying this is the way they have go forward. I'm able to see it with 3 decades of experience that where we are heading. 43B, of course, the earlier speaker talked about the judgment of Allied. It was a very important judgment. The purpose of the amendment. What is the mischief rule they try to attack? What was the amendment purpose, etc. Even same analogy for 53 of the GST Act for interest. GST paid during inquiry investigation proceedings without collecting from customer. Suddenly officer comes, team comes, inquiry comes, and then they say, this month of GST you should pay for 17-18 now. You look at it, you talk to the auditor, he says, yes sir, you should have paid, I don't know how you missed it, pay it off. So you paid during 2022, the GST, which is the tax pertaining to that period. Now, why are you paying GST? On account of buying piece or on account of pressure or ad hoc payment, or it could be genuinely payable. Where the assessee has not deposited service tax but made the payment on being pointed out, it is an expenditure in the course of business and allowable. Gujarat High Court. Input service tax credit is deductible under 37(1) of the Act when such input tax is written off in the books of accounts. Again, ITAD decision, Chennai. Late fee. GST collections are huge. Late fee collections are even more interesting. I'm sure all of you know how much of late fee each assessee pays. For everything there is some kind of late fee, and there is a big credit when late fee is waived also. So GST collections, late fee collections are huge. So when I pay late fee, can I claim it as a business expenditure? Obviously, the old jurisprudence on penalty versus non-penal consequences, all that comes into play. Where the amount paid is partly penal and partly compensatory, the amount to the extent it is compensatory can be allowed as a deduction. Famous judgment of the Supreme Court, Swadeshi Cotton Mills. Interest on sales tax arrears is compensatory in nature and therefore deductible. Again, Supreme Court in the case of Lakshman Das. Then we incur CSR expenditure. Why do we incur CSR expenditure? By nature, I want to spend on the society. One fellow. Another fellow, Act says so, I am spending. I am forced to incur CSR expenditure, I will incur. Both fellows are doing CSR expenditure. Income tax says, we have an explanation, not allowable as a deduction. Can I claim GST credit on it? You can. There is no express restriction or prohibition in GST. If you are able to demonstrate it is used for purpose of business, you can take the GST credit. Now the latest, Finance Bill 2022. Amounts received due to COVID-19. See what happened during COVID-19, a lot of people affected, some people died also. So one young family, somebody passed away. In fact, this is something which I know. We want to help out that family. So we try to, get significant funds from relatives and friends of that person from abroad. And then I gave a warning saying that whatever you receive will be income from other sources, pay tax on it. They were furious with me saying that, sir, he's struggling, we are trying to get money from him, and you as a tax fellow saying that it's taxable. I said, section 56, there is no relationship between them, it will be definitely taxable. So when I saw the amendment, I was very happy, because this amendment kind of arrested this problem by saying that the following are not income with retrospect effect from 1/4/2020. Of course, they have a ceiling of 10 lakhs, but still it's a good gesture on the part of the government. Now, somebody receives money as for helping them because they got a COVID problem or solving a problem because of a death in the family. That is not taxable under Income Tax Act. Will it be liable to GST? Simple argument. Where is the consideration? I have not provided services. It's a contribution. It has got no link to a consideration and therefore there is no question of GST. It is also treated as a perquisite. This doubt was there. Luckily, Income Tax Act again retrospectively amended, Finance Bill 2002. They have said that it will not form part of perquisite. But gift in excess of 50,000 in any financial year by an employer to employee is not supplied. So you have not exceeding 50,000. So if it is given as a gift article and more than 50,000 rupees to solve a problem, it can get taxed under GST. So both laws will have to always, it's like two tracks. They run parallelly and government believes that they can always have a junction. You cannot have a junction for these two tracks. They are separate legislation, separate transactions, allow them to coexist separately. Financial statements and GST you can compare. Financial statements and IT return you can compare. Don't compare IT return and GST return because they are not comparable. Latest 194R, Finance Bill 2022. What does it say? Sir, you are a businessman. Okay. You are giving this gold coin to your dealer. Why are you giving? Sir, he is achieving target. Unless I give him gold coin, he will go to some other fellow. I have to keep him in my supply chain. So I will give him a washing machine, I will give him refrigerator, I will give him gold coin. Is he paying income tax on that? Please go and ask him. No, I've been trying to ask him, but this section that he should pay income tax on it came 60 years ago. This particular section, 28 clause 4 or something, that he has to offer it for income tax, came 60 years ago. Finance Bill 2022 says that the fellows who are receiving all this contribution are not paying tax. Therefore, to find out whether they should pay tax or not, 194R is being introduced. 60 years it takes for you to find out that he has not paid tax, and therefore you bring TDS under 194R. So 194R, very wide. Any contribution such as gold or gadgets, Apple phone that is given, all that will get into TDS. You may ask me, sir, you are giving an Apple phone, how deduct TDS? Same problem, calculate the value of the Apple phone, find out the 10% TDS, pay the tax upfront, and then give the Apple phone. You can't remove the battery and give the phone or something like that. You can't do all that. So you will have to do a TDS only through a financial mechanism. Now, what is the issue here? There could be benefits which are not capable of measurement, such as loyalty points, reward points. You give loyalty points, reward points to dealer and say you can encash 2 years later. How do you even find out the value of that item? The scope of ambit of benefits and perks would be a huge matter of interpretation in income tax. For example, the company could handle the legal disputes of all its dealers as a matter of convenience. Is it a benefit or a contribution? Now, where does GST come into play? This fellow who receives the gold coin or the Apple phone or the Whirlpool refrigerator, because of 194R, will show it in his will get the transaction reflected. He will also offer it under income tax. Then GST will come and say, you have received something. Have you paid GST on it? I have not rendered any supply. Now, ideally, how would you treat this? It will probably put into miscellaneous income. That's how you would record this transaction. So, every miscellaneous income will get into this trigger of GST, where 194R will have its own trigger as far as GST is concerned. Last few slides, I'll just complete and wind up with that. There are special provisions in Income Tax Act which don't exist in GST. 50C. In fact, when 50C originally came, I argued before the Madras High Court saying that it is absurd to adopt a guideline value and adopt for taxation. Madras High Court upheld the validity of the provision on the simple argument saying that this comes under the provisions for unearthing tax evasion, tax avoidance, etc., and therefore government has got free leeway, they can do whatever they want. So what is 50C? You sell at 1 crore, stamp duty valuation is 1.5 crores, that is the apparent consideration that is adopted as far as 50C is concerned. No such concept in GST. GST talks about transaction value. So you are doing construction services. What is your actual transaction value can only mean tax? You have adopted guideline value for income tax. That is income tax because 50C made me do it. I don't have any such provision in income tax in GST. Similarly, 50D, no such concept in GST, only exists in income tax. This I already talked about. 56(2) clause 10, receipt of sum of money without consideration where the aggregate value exceeds 50,000. Simple answer is, only if I receive without consideration, 56(2)(10) can get triggered. That means there is no consideration. Because 56(2)(10) says, only if I receive without consideration. Therefore, if consideration is not there, supply collapses. Supply for consideration, consideration for supply. That's how GST should be perceived. Doctrine of mutuality. Income tax recognizes it even now. They recognize this principle right from the Chelmsford case to the YMIA case, they still recognize this principle. Service tax and VAT, we fought in Supreme Court in the famous Calcutta Club case. We won before Supreme Court, saying that even after the 40th Amendment, there cannot be any service tax, there cannot be any VAT. So we were all of the view that the same analogy should apply in GST because there is no service involved, one and the same. So we opined saying that GST will not apply. Some chaps went to AR rulings and asked the question, is Rotary Club liable to GST? AR said no, mutuality will apply, Calcutta Club would apply. Government got upset. If AR starts holding, because AR normally will not give a ruling in favor of the assessee. If AR himself is saying that mutuality will apply to GST, it is too risky, let us amend the law. So, CGST Act has been amended retrospectively from 1st July 2017, whereby they nullify even AR rulings, saying that we want GST on these transactions, mutuality does not apply. Of course, whether the amendment is enough or not, that's a separate topic for discussion. Income tax has got an interesting concept called as diversion by overriding title. That money is not mine. It hit me, but it's not mine. By overriding principle, right from the Bijli cotton mills, where the invoice was raised and a particular amount was collected towards Dharmada, meant for a particular trust, it is not mine, it is going elsewhere, therefore it is not my income. Whether those concepts can be tested in GST. These are all new ideas which keep coming, saying that this is not my revenue, it is his revenue. I'll pay tax on my revenue, let him pay tax on his revenue. Reimbursement, non-applicable of TDS, non-applicable of GST, but pure agency conditions are applicable. So there are enough concepts of income tax law and GST, and I'll come to the last slide and end for the session. What is the way forward? Government should seriously re-examine this entire exercise of comparing IT returns and service tax and GST returns. Why should they do this? What is the necessity for comparing these two? You can compare financial statements, you can compare audited statements, you can compare my purchase data, you can compare my sale data, all that you do. But these are two different subjects, completely different subjects. And expecting them to align is expecting a very unhappy couple to stay together. They cannot. They have their ideological differences. They were not even intending to get married. You force them into a marriage. You can't force something. So this is exactly what the government is doing. They have to align. Why are they not matching? They cannot match. You accept that. You do your assessment. You have enough provisions under both laws. You take care of those things. And what is the tool for all this? Form 26AS? Yes. AAS is another avatar. The Form 26AS was itself was a big issue. Now this annual information statement. And now this new idea of auto-populated. You can't fill in anything. We'll fill up for you itself. And government now says, makes it easier for assessees. This is not my figure here. You're suddenly putting some figure, this is not my transaction. How do you even erase it? I can't erase it. I'll have to then do a note or something like that. There should be an understanding that both income tax and indirect tax operate in different fields and have limited convergence points. This is something which the top level will have to understand, and slowly probably courts will have to pass on that message. Challenges in reconciliation should be understood because it is not easy to reconcile. How do you reconcile income and turnover? That's a fundamental concept. How do you reconcile income and turnover? So those are numbers which are completely different. Of course, you can give lot of sheets to reconcile this, but ultimately it's a wasteful exercise. So my humble submission at the end of the presentation is that going forward, we need to probably communicate that certain things allow it to work in their own field of legislations. There are enough mechanisms to address that instead of trying to compare other legislations. With that, I conclude and thank you for a very, very patient hearing.
During the session, but I would like to say you have aptly cleared the points of marriage between GST and income tax with explicit examples, though we are very sure that the asterisks and the invisible ink will definitely prevail. Thank you so much, sir. At this instance, we would like to felicitate the committee members for their sheer dedication and the zealous efforts at the hands of our eminent speaker, Advocate K. Vaitheeswaran, sir. So may I please request you to felicitate Advocate Tejas Shah with a memento. Followed by CA Sanjeev Budh. Advocate Bhupendra Thakkar. Advocate Pankaj Shah. Advocate Umesh Majmudar. Thank you so much, sir. Here we come to the end of the fourth technical session, and I would invite the dignitaries on the dais for the... I'm sorry. Sir, I would request you to felicitate Advocate Rajesh Shah, sir, too. Here we come to the end of the fourth technical session. I invite the dignitaries on the dais for a group photograph. Thank you, please. At this juncture, we would like to heartily extend thanks to the Conclave supporters, PFC, Real Books, ETTMT, Omkar Rivanta, MP World Travel, Bajaj Alliance, iRecord, HK Computer and Televiz. We would also like to thank and acknowledge the sincere efforts of the various